Markets in the green ahead of December series expiry. Nifty above 21,700, Sensex above 72,300. Broader markets in line. All sectoral indices barring media, IT in the green. Media index extends losses while realty reverses. Hudco rallies in trade. The stock is up over 11% on the back of signing an accord with the Gujarat government for 14,500 crores. And Zomato down almost 3% after GST demand notice for 401 crore rupees. Dense fog expected to continue in the northwest and parts of central India. 22 trains are running late and 134 flights delayed in Delhi.
Hello and welcome. This is Hot Money. I am Agam Vakil and with me is Hiral Dadia. Well, we start by taking a look at how markets are faring at this point in time, and we are seeing advances, more strength as far as the markets are concerned. The Nifty now currently above the mark of 21,700, and we're seeing gains, further gains in the Bank Nifty as well, which in fact is also up around 0.5%. Currently trading somewhere around 48,500. Now, as far as your broader market, as far as your benchmarks are concerned, pardon me, Coal India leads the gains. It's up around 2.2%, along with NTPC, which is also advancing by as much as 2%. So gains for both Coal India and NTPC. If Hero Motorcorp is the other one, which is also up and about, that's advancing by around 1.8% as well. In terms of losers, we don't have too much when it comes to the benchmarks. We only have Ultratech and Eicher Motors, which are under pressure, but the losses here are less than 1% on an intraday basis. So clearly the markets, while advancing on the back of good gains too. To talk to you about the broader markets, well, we talk about something like a mid-cap and small-cap indices. Both of them are advancing, and we do have substantial gains, moving largely in tandem with the benchmarks. But HPCL from the mid-cap 100 is the one which makes the cut right at the top of the list, up around 6.8%. And we have good gains in something like a Steel Authority India as well. That's SAIL. That's up around 4.7%. And we have gains in BHEL, which is also up around 4.4%. On the whole, we have a whole host of, well, public sector companies which are doing well in today's day of trade. On the losing end, we don't have too much to speak for once again. Say for something like a Biocon, which is under pressure, that's down around 2.8%. And then we have Laurus Laboratories, which is down around 1.7%. All in all, turning out to be a good final expiry session for the year, Hiral.
Absolutely, a strong one. And how today ends is also going to be absolutely crucial. But let's pull up Aarti Industries on the screens as well and see what that counter is doing in trade as we speak. 0.2% lower in today's session. Now, they've entered into a 9-year long-term contract with a global agrochem major, which is for around 9 years, with a revenue potential of nearly 3,000 odd crores. Rashesh Gogri, Vice Chairman and MD at Aarti Industries, joins in. Rashesh, good afternoon and welcome to the show. And firstly, congratulations on the deal. If you could help us understand more, firstly, 9 year is the tenure, 3,000 crores is the kind of potential revenue. By when do you see revenues trickling in for this one, and what will be the yearly run rate?
Hi, good afternoon. Thank you for your congratulations. We will be commencing the supplies of this commodity, these specialty products immediately, and 2025 financial year will see the ramp up, and then it will be a steady state supply to the customer agrochemical major.
Well, if you could tell us, Mr. Gogri, about which market is this order coming from? I know you can't mention the exact name of the company, but is it from North America, Europe, rest of the world?
End usage of this market, this product which is going for an agrochemical, is particularly in North America and South America, and also Europe. And the manufacturer is a global manufacturer,
Okay.
who is, yeah.
Okay. And if you could clarify in terms of the yearly potential?
Yeah, the yearly potential is going to be 330 crores per year. So it's evenly spread out over next 9 years.
So we understand that the current capex plans are sufficient to meet this contract requirement. Can you reiterate what your capital expenditure plans are for the balance of this financial year as well as FY25?
Yeah, so this financial year FY24 and 25, we are going to totally spend close to 2,400 to 2,800 crore rupees. And out of which this year we have spent 1,400 crores, plan to spend 1,400 crores. And these projects are basically, apart from expansion of existing products, also we are looking at entering the new value chain of chlorotoluene, and that will be, some phases of that will be starting in 2025 financial year and also 2026.
Okay. Now, taking this contract itself into consideration, how much does this imply in terms of the margins? Because overall, we're looking at around 18%, which is the mid-cycle EBITDA margins for Aarti. Taking this contract, how much would it be accretive with regards to the EBITDA and to the earnings from, if you have to look at 25, 26?
So basically, this contract will have an EBITDA margin of around 20%. And so it will be a little bit additive than the current average run rate that you mentioned in terms of EBITDA percentage.
And from an earnings perspective?
From an earnings perspective, I think we have given a guidance of next year FY25 of total earnings of 1,700 crore earlier, which was earlier given in 2022, 2023, which we have currently stated that it will be lower by 5 to 15% looking at the overall market scenario and everything. So that is where we stand in terms of overall guidance that we have.
Okay. Apart from this, if you see in terms of the improvement from a demand perspective, how are you looking at FY25? Because clearly, if I'm looking at the revenues or the turnover from FY19 to 23 and the margin profile has slightly deteriorated. FY22, the profitability was almost around 1,200 odd crores. When do you see when do you think you could be back to that FY22 level?
Yeah, in FY22, we had one-time gain of the contract settlement cancellation money that we received from one of the long-term contract that we had. And that's why, the numbers are not comparable. However, we are seeing the demand slightly improving last 3 quarters from whatever the last 3 quarters were there. And now we are looking at going forward, the demand has improved, particularly in certain sectors of discretionary spend, and polymers also slowly demand is picking up. I think agrochemical demand will take another 2-3 quarters, but I think it is more dependent on the product-specific, molecule-specific demand. So we see overall going forward, I think the things will stabilize, and in 3 to 5 quarters, I think the demand should come back, and the destocking which is happening has practically, now the reordering has started, in certain commodities.
Right, Mr. Gogri, just want a confirmation on your top line expectation with respect to FY24. I believe you gave us a number. I just want clarification on that one. And also if we could in fact expect growth going in as far as FY25 is concerned.
Generally, we don't give guidance on the top line because ultimately top line is dependent on our base raw material, and practically it is passed through. So current year we are looking at 900 to 1,000 crore EBITDA, and next year we are looking at the number that I stated. So I think practically that is the number that Street should focus on rather than the top line, because top line is dependent on the raw material variable cost.
Right. Rashesh, another question that I have is, the sector itself had headwinds from inventory destocking, demand pressure from export markets as well. So from that scenario, now that the improvement is expected in the next 6 to 8 months, what is that trajectory then looking like?
Yeah, so we see potentially that, as I mentioned earlier also, that now sector by sector we are seeing some improvements coming, and I think financial year 25 would be a year of recovery, and in this year I think by the end of the year we expect this destocking based demand slump to end and normalcy returning. And once the normalcy returns and the demand comes back, I think the pricing also will improve. So that is what we believe, that this will be a recovery year. 25 will be a recovery year for us.
Right. So a recovery year in terms of FY25, that's what we should be eyeing as well. Thank you, Rashesh, so much for joining us on the show and sharing the view. So that's the management of Aarti Industries, clearly giving us an indication that now FY25 could be a normal year from here on. But let's also bring in Ashish Kapoor, CEO at Invest Shopee, to understand more and get his views as well. Ashish, clearly, we were speaking to the management of Aarti Industries, and he's clearly indicating with the kind of revenue potential that they have from the recent deal win yesterday, which is a 9-year deal, and the turnaround that can be expected from FY25 onwards with regards to normalization. What's your view on Aarti?
Well, I think the stock has been a great capital multiplier, wealth builder over the years, and I think with the pharma kind of getting its mojo back, I think it's time to look at these kind of stocks. I think Aarti should certainly be an interesting stock idea to look at the current levels.
Stay with us. We do want to talk about all the big multi-baggers of 2023, even as we approach the end of the year. We want to take a look at what's really happened, how many of these are in fact have at least doubled, and well, how many of these have in fact given you even more returns. Let's get in my colleague Mahima to give us an update on this one. Mahima.
Right, Agam. So as you rightly said, this year has been really great for the markets, and we've seen a lot of multi-baggers. If we talk about Nifty 500, we have 48 stocks that were multi-baggers. Then we have 12 stocks of mid-cap that were multi-baggers and 32 stocks of small-cap that turned out to be multi-baggers. If we talk about the sectors, we had a lot of multi-baggers from the capital goods sectors. Then we had good multi-baggers from financial services, and then a lot of railway stocks also turned out to be multi-baggers. Now, just to state a reason as to why a particular stock, these particular stocks turned into multi-baggers. The first one we had was Zomato. Zomato had a very bad year in 2022 where it was down 59%. However, because its Q1 results showed profits, the stock has really made great moves. And also what has worked for them is improved financials, and they've also started charging platform fees for them. Then we also had Hiral, which was really a high flyer for the year. This is on the back of the strong order book and better execution. Then in the mid-cap multi-baggers, we had PFC and REC, which were on the backs of the power stocks that have really picked up. Now, what has worked for them is that they have had a robust loan growth, and overall, the entire the loan book is very large, and which was driving the growth of the stock. Then we had Nifty small cap. In Nifty small cap, the outperforming stock was BSE. The question here is that the BSE had a very good rally this year. However, will this momentum stay going forward or not is we've yet to see that. Then we also had Suzlon Energy. Suzlon Energy was added to the MSCI index and was also has a very good healthy order book, because of which the stock has gained a lot. Then we had Apar Industries. What worked for Apar Industries is that it had very strong financials, and their profits nearly doubled in Q2 FY24. And lastly, if we talk about the railway stocks altogether, the government is really working on revamping the entire Indian railway system, and because of which all railway stocks have been multi-baggers for this year. The railway minister recently also announced that he'll be buying new trains worth rupees 1 lakh crores in the next 4 to 5 years. So these were some of the multi-baggers that we have seen in 2023.
Well, to talk about the railway sector in general would certainly be an understatement. And of course, a whole host of stocks, other stocks that Mahima has also mentioned about. Mahima, thank you so much for getting us those updates on multi-baggers of this calendar year 2023. But on that note, we slip into a short break. On the other side, we talk a lot more about stocks. Stay tuned in.
You're watching Hot Money. Let's shift focus to a couple of other smaller names that have been in focus today. You have Jai Balaji Industry. Now that stock is locked in upper circuit. We did speak to the management as well today to understand what's the road outlook, because it's been a completely turnaround story for the company from being an NPA to getting into NCLT and a turnaround from there on. Let's listen in firstly to a bite of that conversation.
The capex plan, it is for a total of around 1,000 crores, out of which around 350-400 crores has already been spent from internal accruals entirely. There is no debt taken for the capex. And out of the balance 500-550 crores, this is to be completed over the next 12 to 15 months. So with the completion in the capex program, what is happening, the capex program is on two fronts. One is on some cost-cutting measures, which are drastic, and the second is on adding capacities in value-added products like ductile iron pipes and specialty ferroalloys, and also adding some hot metal capacity.
Right, so that's the management. Ashish, this has been a turnaround story. I don't know how closely you've tracked the counter. What's your view? Because this was one of the companies that was in that first or the second tranche of the NCLT list. And from there on, it's picked up steam again with the kind of capex plans. And they just have around 600 odd crores in terms of their debt, which is remaining to be repaid to a Tata Capital as an ARC.
Well, yes, I think the turnaround is quite real. I still see some more steam left. I think a target of 900 can be kept, and you can hold on to the stock if you've already bought it at lower levels. I think 900 would be a fair level to kind of exit from this.
Okay, we shift focus to green panel then, and this one once again is up and about. In fact, advancing quite substantially. While it's not trading at day's highs, it is trading at good gains on an intraday basis. So we in fact also spoke to the management of this company, the CFO, specifically Vishwanathan Venkatramani, and we spoke about capex as well as expansion plans for the company. This is what he had to say. Listen in.
Our capacity will be online sometime in Q3 next year, and we are currently operating around 75 to 80%, and we hope to reach somewhere between 90 to 95% next year from the existing capacity. And the new capacity will be focused on primarily thin MDF boards with thickness between 1.5 to 5.5 millimeters, for which there is already a significant market in India. So I think we'll have a ready market for the new capacity right from day one.
And even as it makes a new high today, it's a whole host of MDF companies which have done very, very well through the course of the year, not unlike the rest of the broader markets. Of course, green panel is also one which has in fact advanced and done reasonably well. Ashish, your view on this particular sector when it comes to MDF, and if you do have a specific one on green panel as well?
Well, I think I'm quite bullish both on the sector as well as the stock. I think there's much more steam left. I think, again, you can even look at buying on the declines, keeping 600 as a target. I think this looks pretty good, even hold and even for buying fresh also.
Right, so that's with regards to green panel, but let's quickly slip into a short break. Once we are back, we will get to a couple of more counters to discuss with Ashish. We'll be right back. Welcome back. You're watching Hot Money. HUDCO is one of the star performers today. 14,500 crores is the kind of investments they're looking at to finance urban and to finance projects in Gujarat. Now, the stock is at the day's highest level, seeing gains of 18 to 19%. They've already signed the MOU with the government of Gujarat. So strong moves on this one. And if you see from the disbursements as well as if you see in terms of the loans, the growth has been absolutely substantial in the first half of FY24, and the stock has nearly doubled in the last 6 months. Ashish, coming to you, what's your view on HUDCO?
Well, I think the stock has moved up a lot, but still looks good. Obviously, Kashun by today, it's really up a lot. But on any declines, look at buying. Keep 180 as the target. I think the PSU theme and also the fact that there are a lot of urban development projects which are in the pipeline, so the company should continue to do well. 180 can be a good target for this, and so on a decline or on any kind of bad day in the market, look at buying HUDCO.
All right, a very quick look at KPI Green Energy as well, where the company will take up and consider a bonus issue this coming 30th of December, and that's also the reason why we've seen that sharp up move around 4.5% in today's day of trade. Do remember that because of the fact that the company has seen a huge order flow through the course of the last 3 quarters is also the reason why it's been one of the biggest movers through the course of the year. But we've completely run out of time on the show, so I'm going to take a moment to thank Ashish for joining us and taking us through his views on all the stocks that we have addressed. And on that note, it's a wrap on Hot Money, but lots more lined up. Stay tuned to NDTV Profit.